Hello and welcome to another update video about Natgas. We basically just pick up where we left it yesterday. Basically, the chart is unchanged. It was a good decision to adjust the chart yesterday and to confirm or indicate that the fifth wave of circle wave 3 is likely still unfolding. At least the structure suggested that. I gave you a first ideal target zone for this wave 5 of 3, pointing towards $1.78 and $1.90. Obviously, then eventually this fifth wave should go a little lower, maybe towards 160, 170. We can define that a little bit better once we have wave 4 in place. For anybody who's new, at the moment, the idea is that we are sort of in the last wave down of a long-term downtrend that started, I think it was in 2021, and it could mark the overall low point, of the bear market, this last wave 5 here. We're obviously looking currently at a potential situation in which in the stock market, either a long-term top is very close. We're not there yet. I think we're still trending a little higher, for example, in the stock market over the next few weeks and months maybe. That was also in line with the overall forecast, my forecast for 2024, that in the first 1 or 2 quarters, we are going to see new all-time highs. We see that at the moment. However, that means I don't think we are at the beginning of a new bull market in the stock market. I think we are close to either long-term top or a more substantial top at least. And I think we see exactly the opposite in Natgas, possibly oil as well. Gold already is in an uptrend, but here it's like, we have come down, since 2021. And, is it 2021? Let me just double check that. I might be wrong there. Probably not 2021, 2022. 2022. No. Okay, it's not all on here. I think it might have been 2021. Anyway, forget about that. It's not on here. I'm just here looking at the contract. Need to look at the continuous one. But anyway, that's not so important. It's a long-term downtrend. And the idea is that, we are very close to a low. And I've mentioned that now for a while. But we've been waiting for that one more low to happen. And then we thought, okay, maybe it's already in here. But then it broke another micro support level. So we are still in the game, still in the downtrend. And that one more low that we were watching for here actually is materializing now. Basically, the market tricked us a little bit, but could not hold micro support. So it's going back to its original trajectory. And looking at the count structure, it suggests that the fourth wave topped here around the 9th of January. And now we're obviously watching here for this fifth wave to the downside to complete. That would be a 5-wave pattern. So we're looking here at wave 1, wave 1, wave 2. We only adjusted the count yesterday, but we didn't need to do a lot. Wave 3 is still in the making, 4, 5. So all I need to do today is to confirm the count. Okay, we're trending down lower. The market trended down a little bit lower today, closer to that target range I defined yesterday. All I need to do is to adjust resistance. This is resistance for wave 4. I did explain to you if we go down a little lower, which was anticipated, we have to adjust the resistance area. This is just the resistance for wave 4 once it starts, and it has to be adjusted until we have a confirmed low in place in wave 3. Then we can lock it. Until then, we have to be flexible with it. It has to move down with the price. Now, looking at the nano structure, this looks like a bit of a bearish flag. There's no point really doing the nano count here, but it looks a bit like a bearish pennant. And obviously a break here below the $1.96 level could send us down to $1.90 next. What exactly the micro count is, could be here a 1, a 2, maybe a 3, maybe a short 4, maybe another short 5. Basically in an ending diagonal here in wave 5. That is very speculative. So I will take that off again. These nano counts on Natgas are extremely difficult. micro counting Natgas is challenging. It really is. But what makes it more difficult is the variety of different charts. Spot chart looks different to the continuous contract, to the March contract, and so on. They're all a bit different. That makes it challenging. Elliott Wave itself is already challenging enough. Trying to bring them all together is even more challenging. So I don't want to be, we don't want to waste too much brain power on the nano counts. But I can tell you that in the very short term, the focus is on lower. A break above the $2.04 level, the last high, would indicate that circle wave 4 has started. Resistance is between $2.10 and $2.27. Really, a break above 227 will already shift probabilities towards, okay, we might be in a breakout, but I still want to allow for the 235 level. At least I've got it on here as additional level to watch. But yeah, so far no change. Downside pressure remains. We have to be patient. Also, this trend line could still be useful. Not that one. Or that one might actually... I'm not sure, it's not very well defined. I don't know if it's just extending this descending wedge here, but I would just pay attention to that trend line here. Maybe a break of that trend line could already be a first indication that circle wave 4 is starting. Looking at the 4 hour, I think we talked about it a few days ago. There was still a little bit of space here on the 4 hour chart. I think yesterday only I mentioned it when I defined the target. So it could still easily trend down a little lower on the 4 hour. Not oversold yet, but we're getting soon probably into the oversold range. Yeah, that might just mean like here that we might get a little bit of a bounce in 4 before we get that final low. It's going to be interesting. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.